Hello traders, Gary Wagner with the gold forecast here on a historic day, September 14th, 2010. It is Tuesday and this is the Daily Report. Gold is trading at new historical highs and currently trading at 1269.40, call it 1269, 1270. We have had a high today of about 1274. You know, we saw this consolidation in the market the other day. We thought that, in fact, this might be a breathing area or an area in which it was going to consolidate and come down. It certainly turned out to be a breathing area, and I'm certainly glad that we have positioned ourselves in the long side at 1255. You know, traders, when we take a look at the big picture here, and we're going to talk a little bit about what fundamental news has pushed it up in a little bit. This is that first record top, 1221, and this is back in December 2009. As you can see, we utterly had taken that out. I looked at this as a key area of resistance, of course, and we have utterly taken that out. And of course, we are now well above our contract highs at 1265, and we have gone into new historical territory. Where do we think the market is going from here? Well, we've been talking about this for the last 2 or 3 months. This is not something that's new. We are looking for a push currently to the $1,300 area. My comfortable target right now is anywhere between $1,300 and $1,325. In terms of some of the fundamentals that came out in the market, this market we all believed was poised to move to the upside, but we had some indications that inflation was kind of heating up in the UK, and this is when the United Kingdom Consumer Price Index rose 3.1% in August, and that's from a year earlier. Now, economists were expecting a 2.9% rise, but you had higher clothing, air travel, you had higher food, and that kind of pushed that index higher. And gold right now is the kind of commodity where you will get investors buying the type of news that will indicate inflationary fears in the future. Now, we also had some other data come out of the United Kingdom. We had weaker industrial production, and when we look at the UK activity for July, it rose 7.1% year over year versus the 8% expected. So we had debt fears, we had stronger inflationary fears. We also had a little bit of economic data that came out of the United States. As we talked about on Friday, we've got a whole cornucopia of stuff coming out. Now, U.S. retail sales for August rose 0.4%, but it was expected that the sales were going to be 0.3%, and it didn't seem to even slow down this move in the gold rally. Very, very interesting day so far. Traders, we're looking at a weekly chart of Forex Gold. As you can see, what I've done is I have put a horizontal line above our old historical high, and as you can see, we're comfortably trading above that. As I said, 1269, 1270 in that area. We took a look at this doji yesterday, and we talked about, or on Friday, and we talked about the fact that it might be showing us a consolidation. We talked about the fact that if we had this lower candle, this black candle, we would form another three-river evening star. In fact, we have not. In fact, it is breaking out to the upside. I can tell you this. Although we have not been so accurate in looking at the day-to-day activity in gold, and I don't think that anybody can. This is not a typical market. I think that we've been absolutely diligent and absolutely correct in the interim, medium, and longer-term direction of the market. This market has not given us the normal cues or signs that we have typically had. And in fact, what we have been witnessing is points in which we saw the market consolidating. These were points in which it was just building energy and creating the necessary impetus to push to that next level up. These are typically markets, these are typically moments in which the market would actually reverse or retrace. We're not seeing typical retracements in this market. That's the reason we put on the base position at 1255 back last week. I'm very happy that we did. What we're going to be looking to do is as follows. As the market, or I should say if the market continues on this upward climb and forms a base, we will look to add to the position itself. At some point, we will get a retracement. But now that we are in this record territory, this wave one here could easily take us to the $1,300. It could also turn on a dime on us. So we want to be real careful, very prudent, and very cognizant of what we're looking at and how we work with this market day to day. We are now looking at the December COMEX contract, New York contract of gold. That is trading at 1272.70. It has had a high of about 1275. The interesting thing is that although I thought we had witnessed the top of this wave one, I'm going to have to do some research, but I'm going to find this hard-pressed to call this a retracement. However, on an interesting level, it did come to the 23% level. So I'm going to have to do some research and study as to how to actually go ahead and label this particular wave here. Because I will tell you this, if what we're looking at is that was our retracement, and as I say, I really need to do some study here. I don't think it is, but I'm going to be doing some study throughout the day. In other words, if we saw 1, 2, and this were in our third wave, that's one of the shortest moves I've seen in history. However, I do want to make note that what we have been witnessing is not your run-of-the-mill gold market. In other words, we're running into historical highs. All of this is unprecedented. All of this is absolutely new to the technician in terms of charting and where we are on these charts. So we'll have to take a serious look to see exactly where we are in terms of our wave count, but I can tell you this, traders, we are at historical highs. We are along this market, and I think it's been a great day in the gold market, and I know it's been a great day for us as subscribers here at the Gold Forecast. This has been Gary Wagner wishing you, as always, good trading, and today I'll wish you great trading. We'll talk to you tomorrow. Bye-bye.